What's happening right now with the weather and how can that impact your wallet? You came here for the truth, so let me unveil that for you. I think it's important for people to understand how all of the pieces of the financial system interconnect. We'll get into some of that today. I'm going to go all around the world and look at some various factors that you should be aware of. Number one, we're going to talk about the weather. Number two, we're going to look at market corrections, the potential for a market correction that both Goldman Sachs and Morgan Stanley have been alluding to. And number three, we're going to look at risk tolerance. I think right now people are simply putting themselves over the edge. A lot to discuss. Let's go. Let's give an update on the repo situation. You could see directly from the New York Fed website. If I scroll down, this is $886 billion for a reverse repo. This continues to go on. People need to understand right now the most important factor about the repo situation is that banks are deciding to basically get paid almost nothing, then loan that money out into the system. This is a true deflationary spiral that's taking place. The Fed actually made it a little bit worse by increasing the amount that the banks would get by holding it there. So in effect, they're actually creating this crisis. Speaking of which, Powell has broad support among the top aides for new Fed term. Looks like he's going to get it. We'll see. Ultimately, it doesn't matter though. It doesn't matter who's the Fed chair because, of course, they have to appease their shareholders. Now, speaking of shareholders, here we're looking at Goldman Sachs. I had brought you this before. I don't think a lot of people saw that video. I wanted to touch on it here just momentarily. This is directly from Goldman Sachs' own website. You might go on other channels and read or I should say, listen to them talk about this. Maybe, just maybe, you do not often find somebody actually giving it to you directly from the source. All the sources are in the description below, by the way, if you want to check them out for yourself. This is goldmansachs.com. You can see right here, the end of 2020, they had approximately $20 billion. And as you can see from the title here of this particular slide, Harvesting Progress of Balance Sheet Equity Portfolio. Interesting way to put it, but anyway, what I wanted to show you here was the fact that, number one, approximately $5 billion of increase in their portfolio because things had done well throughout the year. And then you could see their dispositions. They sold off $5.5 billion throughout this period, and they added $1.5 billion. But throughout the period, they sold $5.5 billion. In the second quarter 2021, they had $21 billion worth. So they sold a significant percentage of their equity portfolio. That's a lot. That's a lot of sales. They did buy some, but you can see that clearly they were selling a lot more. Then you look at Morgan Stanley, says a 10% to 20% correction is ahead. Get defensive and buy staples. They didn't say get defensive, hide in your bunker, put the cash under the mattress. No. They're saying it's time to readjust your portfolio. So if you look at what Morgan Stanley is saying, if you look at what Goldman Sachs is doing, it paints a very different picture from what we're seeing with the retail crowd. I just find it completely out of this world. Why? Why is this happening? SPX skew is around an all-time high, but NDX skew is not. Then we look at this one, downside implied volatility skew, which compares put option prices with at the money option prices, has reached an all-time high. You know, there are different ways to measure volatility. You can look at the MOVE index, you can look at the VIX index, you can look at the skew index. Each is measuring a different thing. But the point here is that right now, it's going off the charts, and you look at it on many different levels. Something fishy is going on. This shows you the amount of money throughout August, going back from 1996 to 2019. And it essentially just shows you right now with the red area that's boxed in for mutual funds specifically and ETFs as a percentage of the total assets under management. And generally, it's not a month where a lot of money flows in. Okay, that's all I'm trying to point out. Percentage of total flows into equity mutual funds and ETFs since 1996. That's all I'm trying to say. Okay, it's not necessarily that it's going to be a crash or anything like that. All it's showing you is that it's generally a weak month to see those inflows. So we'll see what happens throughout that month, but I just think it's interesting. Are they anticipating this? Then we look at this, which I think is massive, and so many people have talked about. I talked about it on the Money GPS Live. I talked about this in the comments section. Many people have been talking about it, and that is global weather troubles. And the impact it has on you, clearly, is agricultural prices. You can see right here, 66% chance of La Nina during November to January. Dryness in Canada, US, seen impacting spring wheat significantly. Brazil corn output down on weather disruption. Russia, Ukraine facing dry weather conditions. Grain and vegetable oil prices remain volatile, driven by weather. You could say this is contrived, this is being done on purpose. I don't know. All I'm saying is that this is happening, and this is definitely the effect. We've seen commodity prices going absolutely berserk at this time, and it looks like it's going to be getting worse. And so what can people do? Well, there are a few things that we can do. Number one, if you have the ability to grow your own food, do it. If all you can do is grow a couple containers on your balcony, do it. Do it. It's better than nothing. Do you have a community garden near your area? You probably don't know, but they do. They have many community gardens around. Could you grow there instead? You sure could. Look for community gardens, type in the name of your city or town, and you will find it, okay? Another thing that you can do is buying today. If you buy today in bulk, you can reserve that price today, and then tomorrow, if the price goes up, it's not such a burden to you because you've already bought at yesterday's price. So these are two very simple things, and I think that's one way that we should be looking at it. We have a condition happening. What can we do about it? Number one, weather has become a prominent factor all around the world, and I would encourage you to keep your eyes peeled. Number two, you can see that bad weather impacts the price of derivatives and therefore the food that you buy. Number three, Goldman Sachs and Morgan Stanley have both seemingly worried about a correction, worried about something here coming. Is it because of what's happening with the food prices? Is it because of the volatility that they see? That's of course speculation, but we can see the actions that they're taking, and it certainly points to something coming. This article here is talking about stagflation. It's certainly possible. Is it inflation? Is it deflation? Stagflation? I don't know. We seem to be getting elements of all of them. There are some stagflation-like impulses in the economy right now. Right here, you could see it's prudent for investors to be thinking about what if stagflation happens. And, you know, I have to talk about this. This is a rebound from a big recession. Look, the recession, according to NBER, the official agency that dictates when recessions start and end, that was only 2 months long. The recession was only 2 months long. So everybody who's affected by any problems today, there's no recession. Yes, the Federal Reserve is very worried about the job situation, the employment outlook. Yes, they're printing up $120 billion a day, but officially we're rebounding from a big recession. Don't worry about it. I mean, it's just nonsense. We don't know what's going to happen, but I'll tell you right now, we are experiencing the effects of inflation. Inflation in the prices of food that I don't care what's going on in the bond market, really. I care about when I go to the grocery store, what am I paying? Coffee prices have gone berserk. look at this in July, going up in a straight line, and then you look at it over the past year, it's truly unbelievable. Take a look. I mean, it's no different than any of the other commodities. When you see it, it is really skyrocketing. Lumber, by the way, just to give you an update, it's up. In this piece here, in this stat, 584 at this time, coming down from 1670 at its peak. And this is just talking about, fighting the housing bubble. Does it have the tools to win? What are they going to do? Really? What are they going to do at this point? Just given the fact that the Federal Reserve and all central banks around the world have extremely low interest rates. That's what people are feeding off of. They're absolutely feeding off of that at this time. I really don't understand. It's just silly. Anyway, mortgage applications have declined, as you can see, minus 4%. Previously, I had brought this to you. You could see it was up 16%. Maybe that was a blip, I said, and clearly it's down. So we'll see what happens. I think it's just the prices are just so high for a lot of people. But you don't have to worry if you're in Canada, because there's an unlimited amount of money in Canada and Canadian real estate. It seems like it's never ending. The prices continuously increase, and you could see the price index going up yet again. It's certainly at a slower pace, but it's on the up. This one here is a little bit of humor. Debt limit steps may run out in October, Budget Office says. They're going to run out. Oh my goodness. It's going to be chaotic. How many times does this happen? Really, truly. They get to the very end and then they say, okay, we just approve it last minute. They do it all the time. Bitcoin's 50% drop from peak hammers crypto loans and derivatives. I really need to stress the fact that people are using margin, people are using leverage. And why? Because on the way up, it magnifies your gains. But I'll tell you right now, on the way down, it's too painful. Should not be using leverage and derivatives or anything like that. Whatever you can invest, you do that because you take the risk on the total loss. Ethereum price rises after Elon Musk confirms he owns the cryptocurrency. And I just think it's funny because people don't buy based on actual fundamentals. People don't buy based on what they think is good or anything. They're buying because somebody said they own it. Well, what if he sold it tomorrow? What do you know? How much does he? Things like this are just ridiculous today. There's so much speculation going on, all markets, and we have to revert to the mean. Whether that's going to come today or tomorrow or 10 years from now, I'm not sure, but things are certainly out of whack. If you're not part of the insiders, you got to do so, because the insiders is my way to connect to you and for you to connect to me. I email you the video every day so that we can get around the shadow ban and what they would call a lower authority in their algorithms. But essentially, we are going to force this algorithm to boost this channel up, because we're going to bring outside traffic. That's going to come from my Instagram, Twitter, LinkedIn, and all those different social medias I've been posting on there. Now I'm bringing people into the YouTube and also from the insiders too. I'm going to reorient this algorithm. I'm telling you, I'm determined. So you get on the insiders at themoneygps.com. It's totally free, of course. If you haven't already, hit that thumbs up button. You're supporting me when you do. If you haven't seen this video already, you definitely want to check it out. Click it and I'll see you there.